Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. I do wish and hope that you guys are doing your preparation in a great manner and you guys are putting all your efforts for the upcoming examination. So, for the September 2025 examination, very few days are actually left. So, please make proper utilization of your time. Don't unnecessarily waste your time and energy. So, please make proper utilization of the balanced time, whatever is available. So without any delay further, let me come directly to the point. Why am I doing this video? So in this video, I'm going to talk about CA Inter GST amendments. So I'm going to talk about the amendments which are there for CA Inter GST, that too for September 2025 attempt, whatever amendments are there that I'm going to bring it before you. So that's been the whole agenda for this video. So will not take much of a time. There are no such major amendments are there. So you need not get worried. Sir, so many amendments are there. Am I required to cover a lot of content? No, not actually. Very limited amendments. Those are also very simple amendments we have. Okay. And one more thing before I go into that amendments part and all. So what and all has been covered. So if you see here, I have given a supplementary material which covers all the amendments. Hardly, if you see, only 8 pages are there. So what content has been included in this supplementary material? So basically, what is the content which is contained in this document? So if you pay close attention, whenever we have given you the material for May 2025 attempt. So if you have looked at the May 2025 material, even our material, if you see, or even if you look at the ICS study material, at the end of few chapters, they have given amendments there itself. In the May 2025 edition itself, if you go through some chapters, if you look at the end of the chapter, so at the end of the chapter itself, they have told there are some amendments which are applicable for September 2025 examination. This they have included for May 2025 edition of the study material only. And even if you are following my material, in my material also, I have included those amendments as it is. So what I have done here, so once again, in this supplementary material, I have included all that here also. So instead of you going and checking each and every chapter and at the end of every chapter finding out what amendments are there for September 25. So what I have done is I have collated, I have separated all that content and included in this supplementary material. Not just that, recently for September 2025 attempt, ICA has released a statutory update. ICA has released statutory update for September 2025 attempt. So in addition to those given in the study material already, there are few more extra amendments which have been given in that statutory update. That also I have included it here. Even that also I have included it here. So this supplementary material is a comprehensive source. You need not refer to any other thing. So what is there in the supplementary material? Those amendments which are given in the May 2025 edition of the study material at the end of the chapter, along with that statutory update, whatever statutory update that has been released for September 2025, in that statutory update information is also covered in this entire supplementary material. So this is what this supplementary material is all about. Each and every amendment will be covered. So please watch this video till the end so that you have a crystal clear clarity of all the amendments. And as you all aware, in the subjects like taxation, so wherever there are amendments, definitely from the amendments there will be a question tested. You all are much aware of it. So in the taxation paper, if at all any amendments are there, from that amendments compulsory one question will be there. So if your time is so good enough, minimum 4 marks you can expect from this amendment. And if your time is so good enough, so even you can expect somewhere around 6 to 8 marks from this amendments alone. But in the worst case scenario, 4 marks of amendments will be tested. So don't miss this video. Please watch this video till the end so that you get complete grip of the amendments. Okay, right. So having said that, let me proceed further now. So let us now go through all the amendments which are applicable for September 2025 attempt. See, if you could see the supplementary material here, I have divided all the amendments chapter wise. So in each chapter, what are the amendments given? So all that I have identified chapter wise. So we'll try to cover the amendments in each and every chapter. So first we will try to commence our discussion with the supply chapter. The first and foremost important chapter, even in our regular classes also we have discussed a lot on the supply chapter, very important from the examination perspective. So when it comes to supply under GST, here in this area there are a few amendments. Let us try to understand what are that amendments under the supply chapter. And if you could see here in the supply chapter, there are amendments in schedule 3. There are amendments in schedule 3. So if you are well aware, so we have discussed there are certain schedules which are given to the GST Act. So how many schedules are there? 3 schedules are there. So we have Schedule 1, we have Schedule 2, then we have Schedule 3. So Schedule 1 talks about those activities which will be considered as supply even if there is no consideration. If you do some activities even without consideration, still they will be deemed as supply. So what are the transactions which will be deemed as supply even without consideration? Those are given under Schedule 1. Then we have discussed Schedule 2, which talks about once an activity has been classified as supply, whether those activities will be considered as supply of goods or those activities will be considered as supply of services, that we have covered under Schedule 2. Then Schedule 3 is also given to the GST Act, which says there are certain activities which will be neither considered as supply of goods, not even considered as supply of services. There are certain activities which will be neither considered as supply of goods, not even considered as supply of services. That means these activities will not be falling under definition of supply only. If these activities are not falling under the definition of supply, there will be no question of GST here. So what are those activities which are falling under Schedule 3 that we have already covered? Like services provided by an employee to the employer in the course of his employment will be neither considered as supply of goods, not even considered as supply of services. So like that, we have seen a list of activities which will be neither considered as supply of goods, not even considered as supply of services. Now, to that list of Schedule 3, they have added 2 more activities, 2 more paragraphs they have added. Para number 9 they have added, and also they have added para number 10. That means 2 extra activities they have added, and these activities will be neither considered as supply of goods, not even considered as supply of services. That means they will not fall under the supply definition only. If they are not falling under supply definition, there is no question of GST here. So let us try to understand what are those 2 extra activities which are added to Schedule 3, which will be neither considered as supply of goods, not even considered as supply of services. So para number 9 and 10. Let us try to understand it. I will try to explain it with the help of examples. But both these things are talking about insurance industry. So to the insurance industry, they have given a few relaxation. To the insurance industry, they have given some relaxation. They have specified certain activities in the insurance industry which will be neither considered as supply of goods, not even considered as supply of services. So both para number 9 and para number 10, both are talking about insurance related activities only. So first I will try to explain para number 9. First, I will try to explain para number 9. Certain insurance activities will be neither considered as supply of goods, not even considered as supply of services. What are they? So say for example, there is a individual who is a businessman. So I'm trying to explain para number 9 first. Okay. So there is a businessman. He is having a huge amount of stock. He is doing a very big business, lakhs and crores of business he is doing. He is having a huge amount of stock. Now he needs insurance coverage for his stock. So as you all are aware, in the industry, people generally insure their stock. Now this person is having, on an average, he will have 100 crores worth of stock. How much worth of stock he is having? 100 crores worth of stock he is having. So now he needs an insurance policy, fire accident policy he wants to have on that 100 crores worth of stock. Okay. So he went to one insurance company, A Insurance Limited. He went to one company, A Insurance Limited, and asked them, sir, I want insurance policy for my stock. I want you to provide coverage of 100 crores. My stock amount is 100 crores. I want coverage for 100 crores. I want you to sell me the insurance policy. I want you to provide the insurance services. Okay. So now he is a service provider. Recipient is this client who wants to take the insurance policy. So he went to this A Insurance Limited and told, boss, I have 100 crores worth of stock. I want to take a fire accident policy for my stock where I expect insurance coverage of 100 crores. Now, A Insurance Limited wants to have this business. They want to sell the insurance policy to this customer. But they don't want to take this amount of huge exposure. 100 crores worth of exposure they don't want. They don't want to take the complete risk of 100 crores worth of exposure. So now what they have told is, what A insurance company has done is, they have approached other insurance companies. Say for example, A Insurance Limited, they have approached B Limited, which is another insurance company. They have approached another insurance limited, C Limited, which is also an insurance company. And somehow A Limited convinced B Limited and C Limited. Somehow A Insurance Limited has convinced A Limited, B Limited and C Limited, and all these three collectively, they want to sell this policy. So here the main insurer is who? A Insurance Limited. So this I call it as lead insurer. Who is he? A Insurance Limited is here what? Lead insurer. Okay. So now they want to sell an insurance policy, but they don't want to have complete exposure. So what this company did, they went to other insurers. So now here we call this B Limited and C Limited as co-insurers. We will call these two people as co-insurers. So these three insurance companies as a group, they sold a policy. So this entire group has sold a policy. So they are ready to offer 100 crores of coverage. This customer is expecting 100 crores of coverage, no? So they as a group, they wanted to accept to this. So they have sold a insurance policy. They have sold a insurance policy has been sold to this customer, where they are offering a coverage of 100 crore. In return, they will get a premium, no? In return, they will get a premium. So what is the premium which they are charging is, say for example, they are charging a premium of 1 crore. How much is the premium? 1 crore is a premium amount. So 1 crore rupees of premium, insurance premium they have charged. Okay, now how this transaction usually works out is, so generally lead insurance, total premium is how much? 1 crore. Say for example, here A Insurance Limited want to take 60% exposure. So they don't want to take entire risk exposure, no? So entire risk exposure is how much here? 100 crores. But as a part of the mutual agreement between these insurance companies, A Insurance Limited has agreed to take 60% coverage. So they are ready, if at all any damage happens, A Insurance Limited will compensate 60%. 60 crores they will compensate. And B Limited has agreed for 20% risk coverage, and C Limited has agreed for 20% risk coverage. Okay, totally they are securing 100 crores. Now, generally what will happen is, whenever they sell these kind of insurance policy, how the transaction will actually happen is, A Insurance Limited, in our example, lead insurer. So A Limited, which is a lead insurer, they will collect the entire premium from the customer. What they will do? They will collect the entire premium. So what is the premium in our example? 1 crore rupees of premium they will collect. 1 crore rupees of premium they will collect. But they will not be entitled to. See, this 1 crore rupees of premium, once again, this is a transaction. This is a supply activity. This will fall under GST. Say, for example, 18% is a GST, which will come to 0.18 crore. Totally, this 1.18 crores is a premium amount, including the GST. Say, for example, insurance company attract 18% of the GST. 1 crore is the premium amount. 18% is the GST, which will come to 18 lakh rupees. Total premium they have collected is 1.18 crores. Total premium they have collected is 1.18 crore. So generally how the settlement will work out is, this A Limited will take the total premium of 1.18 crore. Out of that 1 crore they will keep it. Out of that 1 crore they will retain, and the balance 18 lakh rupees will be paid to government. Balance 18 lakh rupees will be paid as GST to the government. Now, can the A Limited retain this 100 and can they retain this entire 100% of the premium? Can they retain entire 1 crore rupees? No. Why? Because they have accepted to take only 60% coverage. So out of this 1 crore, A Limited will take only 60 lakhs. A Limited will take only 60 lakh rupees. The balance of 40 lakh rupees should be distributed to the co-insurers. So who are the co-insurers in our example? B Limited and C Limited. So B Limited is one co-insurer, C Limited is another co-insurer. So this 40 lakh rupees should be given back to the co-insurers. So because they have also come forward and took the risk, no. So that's why A Limited will give 20 lakh rupees to the B Limited, and C Limited to the C Limited. This lead insurer has a shared 20 lakh rupees with another co-insurer. Now, what actually used to happen is, previously, these GST officers, these proper officers used to harass this insurance companies. So what this proper officer used to do is, so they used to say that here B Limited is providing services and in return they are getting a consideration. C Limited is also providing the services, in return they are getting a consideration. What the proper officer used to do is, on this 20 lakh rupees, they used to collect once again 18% of GST. They used to collect GST even on the premium which was shared by lead insurer to the co-insurers. On this also, GST officers used to harass these insurance companies, asking them to pay the GST, saying that this is also provision of services. They used to say that here co-insurance company is providing services to the lead insurer for a consideration. This transaction also will be called as supply, and on that also they used to collect the GST. But don't you think here, when the lead insurer has collected entire 1 crore rupees of premium, entire 1 crore is already subjected to 18% of the GST or not? On entire 1 crore, they have already collected, lead insurer has already collected 18% of the GST. Now, out of that 1 crore only, which has been completely subjected to GST, from that proceeds only sharing is happening. Now, if the GST officer comes and imposes a GST once again on this distribution, don't you think it is leading to a double taxation? Yes, this is leading to a double taxation. So that's why this para number 9 has been introduced. And what this para number 9 says is, when the lead insurer is sharing the proceeds of the insurance premium with the co-insurers, this transaction will not be considered as supply. This is neither supply of goods, not even supply of services. This transaction will not be supply only. On this, GST should not be imposed. On this, GST should not be imposed. Why? Because it will lead to double taxation. Why? Because it will lead to double taxation. Why? Because when the total premium has been collected by the lead insurer, entire amount of premium has been subjected to GST already. And when the lead insurer is sharing the proceeds with the co-insurers, this activity should not be once again subjected to GST. And how they have ruled this out is, they have introduced one new paragraph, para number 9, which says that the distribution of premium between the lead insurer and the co-insurers will not be considered as supply. That transaction should not attract any GST. So that is what the provision says here. So if you read it, activity of apportionment. See here, apportionment means what? Distribution. So activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance services jointly provided by the lead insurer and the co-insurer to the insured. Insured means that client. In co-insurance agreements, subject to the condition that lead insurer pays the central tax, state tax or union territory tax and the integrated tax on the entire amount of premium. So what they have told, whatever sharing is happening between the lead insurer and the co-insurers, this transaction will not be considered as any supply, provided the lead insurer is paying the amount of GST on the entire premium. So here the lead insurer has collected on the entire 1 crore 18% of the GST and paid it to the government. Since the lead insurer has paid the GST on the entire premium, once again when the sharing is happening, that a transaction should not be treated as supply. Thus the transaction should not attract any extra GST amount. But here the condition what they have told, the lead insurer should have paid the GST on the entire premium. So if that has happened, when the sharing is happening between lead insurer and co-insurer, that a transaction will neither be considered as supply of goods, not even considered as supply of services. No GST on that sharing part. Clear everyone? So that is what para number 9 says. Clear and comfortable everybody? See, if you understand with this kind of example, the provision will go and get registered in your brain. Now, from this, even if they frame a question also, you will definitely write the 100% correct answer. Right. So this is the correct way of learning. Understood everyone? Right. So since we have successfully completed para number 9, now we will try to understand para number 10, which is almost similar to the provision whatever we have discussed in para number 9 with a slight difference. So para number 9 talks about co-insurance agreements. So let me give you one simple differentiation here, then I will try to explain in a detailed manner. Para number 9 talks about co-insurance agreements, whereas para number 10 talks about reinsurance agreements. What does para number 10 talks about? Reinsurance agreements. That's what para number 10 says. So let us try to understand what they try to say here even in para number 10. Okay, once again with the help of example, we'll try to understand it. Say for example, there is one client. Okay, he needs some insurance policy. He needs insurance for his stock. Okay. Say for example, he needs 100 crores worth of stock. He's having 100 crores worth of stock. He want to cover that stock. He want to provide the coverage. He want to have the insurance coverage for that stock. So what he has done is he went to one insurance company, A Insurance Limited. He went to one insurance company and he told, boss, I have 100 crores worth of stock. I need an insurance policy for full coverage. So here what A Insurance Limited has done is, okay, sir, we will sell the policy to you. They did not join hands with the other co-insurers. So they wanted to take the entire 100% of the risk exposure. They want to take the entire 100% of the risk exposure. So what they have told is, they told, okay, sir, we will sell you the insurance policy. So they sold insurance policy, taking 100% risk assurance, 100% risk coverage for a premium. So say for example, here also they have charged 1 crore of premium. How much they have charged? 1 crore amount of premium they have charged. On that 18% of GST, which will come to 0.18 crore, that is 18 lakh rupees. Total 1.18 crores they have charged it. Okay. Now out of this 1 crore rupees they will retake, whereas the 18 lakh rupees of GST whatever they have collected, that will go to the government, that they have deposited with the government. Okay, this is what the transaction has taken place. No co-insurers, nothing. Entire company, one single insurance company has taken the entire risk exposure. Okay, but over a period of time, this A Insurance Limited one is not sure about their risk exposure. Might be they're feeling that they might have taken 100 crores of risk coverage here. That is looking very much bigger on them. Now they want to reinsure it. So in the insurance companies, there will be a concept called reinsurance. If at all you feel that the risk is more than what you wanted to cover, so you can go and reinsure with another insurance company. So now after they have sold the insurance policy, what they have done is they have went to some another company, B Insurance Limited. They went to another company, B Insurance Limited. So this is a primary insured company. So primary insurer. Now this B Limited will become reinsurer. B Limited will become what? Reinsurer. So A Insurance Limited went to B Limited and told, sir, we have taken 100 crores worth of exposure, but we don't want 100% of risk now. We want to reinsure it with you at 50%. 50% of the risk we want to reinsure. We have initially sold a policy for 100 crores. Okay, but now we are feeling that the risk is more than what we can tolerate. So we want you to take 50% of the share. We want you to, we want our policy, we want our risk to be reinsured. So this A Limited went to B Limited and told, sir, we want to reinsure 50% of the risk. This is a quite common business practice among the insurance companies. To which B Limited told, okay, we will reinsure 50%. Now they have collected 1 crore rupees of premium. No, out of that, what they will do? So out of that 5 lakh rupees, out of that 50 lakh rupees, they will sell it to the, out of that 50 lakh rupees, they will reinsure it. Okay. So now what is happening? B Limited is a reinsurer. They are providing services to A Insurance Limited for an amount of 50 lakh rupees. So this is a supply of service. Reinsurer is a service provider and this primary insurer is a service recipient, and this reinsurance services are getting provided to the service recipient. This is a supply of service. On that GST will come. On that GST at the rate of 18% will come. So which will come to 9 lakh rupees. Total they will collect 59 lakh rupees. Total they will collect 59 lakh rupees. 50 lakh rupees will be kept by the reinsurer. 9 lakh rupees will be paid to the government. 9 lakh rupees will be paid to government. This is a supply of service, guys. This is not sharing of the premium. In the previous case, it is not any service. It is just a sharing. On sharing component, there will be no GST. But here it is not sharing. It is altogether a different agreement. So here B Insurance has agreed to reinsure to the primary insurer. So this is a supply of service. This on that 50 lakh rupees, whatever they receive, on that premium, whatever they are charging reinsurance company, all that GST also they will collect and they will pay to the government. But one more thing, what will happen here is, see here, A Insurance Limited is giving business to B Insurance Limited or not. Primary insurer is giving business to the reinsurer. So that's why in the industry, one common practice will be when you are doing the reinsurance, this primary insurer will collect some commission. They will collect what? Some commission. Why? Because A Limited is the primary insurer. Okay, so he found out the client, he sold the policy to him. Now they are getting it reinsured with another company. That means they are giving a business to the reinsurer. So on that, they will take some commission called receding commission, we call it. What do we call it? So on that, they will take some commission called receding commission. So they will take receding commission. Say for example, they are taking receding commission of 10%. Why? Because they are giving business to B Insurance Limited. No. So they will take something called receding commission. On what? On the premium, whatever they are paying to the reinsurer, on that they will take something called receding commission. So now here, what will be the receding commission? I told 10%. So what is the premium they are paying? 50 lakh rupees is the premium they are paying. On that, if you multiply 10%, you will get 5 lakh rupees. So this 5 lakh rupees of receding commission, they will get it. Who will get it? Primary insurer will get this receding commission. Okay. So now don't you think A Insurance Limited is providing business to B Limited for which they are receiving a commission of 5 lakh rupees, for which they are receiving a commission of 5 lakh rupees. So here A Insurance Limited is providing services to B Insurance Limited, who is a reinsurer, for which they are receiving 5 lakh rupees of commission. Don't you think A is supplying services to B? Yes, A is supplying services to the B. So this will be considered as supply of services. What previously GST officer used to do is, on that 5 lakh rupees also they used to charge GST. On that receding commission also they used to charge a GST. But here also what is happening is, anyhow on this entire 50 lakh rupees, it has been subjected to 18% GST. From that 50 lakh rupees only 10% they are collecting it as a receding commission. This entire 50 lakh rupees premium, whatever they have paid to B Insurance, on that anyhow this B Insurance Limited has collected 18% of GST and paid to the government. In this entire 50 lakh rupees, which has attracted 18% of the GST, in that only 10% of the commission this company is receiving. Yes or no? From that entire premium 50 lakh rupees, which has subjected to GST at the rate of 18%, in that only a portion they are receiving it as a receding commission. Okay, so now on this receding commission, if you once again charge GST, then what will happen? Double taxation here once again. Here what will happen? Double taxation. So now, since it is getting taxed double, so that's why they have introduced para number 10, saying that this receding commission will neither be considered as supply of services, not even considered as supply of goods. It will not be a supply only, and there will be no question of GST here. Able to understand? So that's what para number 10 is all about. So when the primary insurer is getting some receding commission by giving business to the reinsurer, on that receding commission you should not collect any GST. That will be neither considered as supply of goods, not even considered as supply of services. It has been fully outside of the GST purview. Sir, what is the logic behind it? The logic behind it is, see, this receding commission, you are getting it from this receding commission is only a part of the reinsurance premium, which has been subjected to full value at the GST at the applicable rate. From that only a portion is going to the reinsurer. From that only a portion is going to the primary insurer. So that's why, since entire 50 lakh rupees has already been subjected to GST, if you tax this receding commission once again, it will be once again double taxation. That's why, to avoid it, they have introduced this para number 10. Able to understand? See how practically the settlement will happen here is, how practically this transaction will get settled is, A insurance company is required to pay how much? 50 lakh rupees. On that GST will be 59 lakh rupees. But in return, they have to get this 5 lakh rupees as commission, no? Receding commission, no? So what net A Insurance Limited will do is, totally they are required to pay 59 lakh rupees. Out of that, they will reduce their commission of 5 lakh rupees. They will reduce their commission of 5 lakh rupees, and balance of 54 lakh rupees only will be paid to the reinsurer. Now, out of this 54 lakh rupees, which has been received by B Insurance Limited, only 45 lakh rupees belongs to them. Only 45 lakh rupees belong to them. Why? Because 50 lakh rupees is their premium. From that 5% receding commission, they will take it off, and balance in 9 lakh rupees, they will pay it as GST to the government. Here also, if you see here, entire 59 lakh rupees, entire 50 lakh rupees has been subjected to GST, and this receding commission is only a part of that 50 lakh rupees, which has already been subjected to GST. So that's why, in order to avoid the double taxation, this receding commission has been kept outside of the purview of the GST. Able to understand here? Clear, everyone? See, para number 9 says, when there is a sharing happening between lead insurer and co-insurer, no GST. It will be neither considered as supply of goods, not even considered as supply of services. Para number 10 talks about reinsurance contracts. So in the case of reinsurance contract, from the reinsurer, the primary insurer will collect something called a commission, receding commission. So para number 10 has kept even that receding commission outside of the purview of the GST. Why? Because it will once again lead to a double taxation. Understood? Now, if you start reading this para number 10, you will get the clarity here. So if you start reading it, services by the insurer to the reinsurer, for which you are getting a ceding commission or reinsurance commission. Not receding commission, sorry, it will be generally called as ceding commission or reinsurance commission, which will be deducted from the reinsurance premium paid by the insurer to the reinsurer, subject to the condition that central tax, state tax, union territory, and the integrated tax is paid by the reinsurer on the gross insurance premium, gross reinsurance premium payable by the insurer to the reinsurer, inclusive of said ceding commission or the reinsurance commission. So if you start giving the terminology here, so what is the reinsurance premium here? In the given case, reinsurance premium is total 50 lakh rupees. In that, what is the ceding commission or the reinsurance commission? Which is 5 lakh rupees. So this reinsurer will anyhow pay the GST on complete 50 lakh rupees. He will pay the GST. From that only a part is flowing to the insurer in the name of ceding commission. On that there should not be GST. It will be neither considered as supply of goods, not even considered as supply of services. So that has been the whole objective of para number 10. Clear everyone? So two things regarding insurance company, very, very important from the examination perspective. So what does para number 9 and para number 10 say? Let us try to summarize it here. So para number 9 says, let me try to summarize it here. So there is a lead insurer. There is a lead insurer and there are co-insurers. Now, apportionment happening. There is a apportionment happening from lead insurer to the co-insurers. This apportionment will neither be considered as supply of goods, not even considered as supply of services, no GST. But subject to a condition. What is the condition? Lead insurer should have collected GST at the applicable rate. On the entire premium, lead insurer should have collected the GST and paid it to the government. Then we have para number 10. Sir, what does para number 10 say? So there is one insurer. There is one insurer and there is a reinsurer. Okay. So now from the insurer to the reinsurer, there will be something flowing called reinsurance premium will be there. Total reinsurance premium will be there. So that will be subjected to GST. That will attract GST at the applicable percentage. On that GST should be paid. Now, as a part of this reinsurance contract, there will be flowing something from the reinsurer to the insurer. There will be some consideration called ceding commission. There will be something called ceding commission, or even you can call it as reinsurance commission. You can either call it as ceding commission or you can call it as reinsurance commission. So now this ceding commission or insurance commission, this will be outside of the GST purview. This activity will neither be considered as supply of goods, not even considered as supply of services, and there is no question of GST getting attracted here. Understood everyone? So this is what the summary of para number 9 and para number 10. If I'm not wrong, definitely I'm expecting a question from this, any of the two paragraphs of the schedule 3. Clear? Able to understand? So I explained you in a detailed manner with the help of example. Along with that, I have also given you a summary. So now proceeding further with the amendments in the next chapter. Since we are done with the supply chapter, let us try to understand the amendments in the subsequent chapters. So we'll try to understand a few amendments from charge of GST. Very simple. So here in section number 9, in the charging section itself, we have an amendment. So guys, if you remember, in the introduction to GST chapter, we have understood what is the meaning of GST. So we told that GST is a tax on supply of the goods or services or both, except alcoholic liquor for human consumption. So we all know that alcoholic liquor for human consumption will be outside of the GST purview. We understood the logic and all in our regular sessions. Why? Because alcoholic liquor for human consumption is a significant source of revenue for the state governments. They don't want to give up their right to tax the alcoholic liquor for human consumption. So that's why GST is a tax on supply of the goods or services or both, except alcoholic liquor for human consumption. And they have made one slight change in that charging section. So if you read that, they say that there shall be levied a tax called Central Goods and Service Tax Act on all intrastate supply of services or both, except on supply of alcoholic liquor for human consumption and undenatured extra neutral alcohol or rectified spirit used for manufacturing of alcoholic liquor for human consumption. So what is the extra thing they have added? So initially, in the initial stages, they have kept only alcoholic liquor for human consumption outside of the GST purview. Now they are extending it. What they are saying, even undenatured extra neutral alcohol or rectified spirit, which will be used in the manufacturing of alcoholic liquor for human consumption, that is also outside of the GST purview. Not the final product. See, alcoholic liquor for human consumption is the final product. That is outside of the GST purview. For the purpose of manufacturing, for the purpose of creating that alcoholic liquor for human consumption, whatever ingredients you are using, mainly they have named two ingredients here. Number one, undenatured extra neutral alcohol or rectified spirit. These two will be used even in the manufacturing of alcoholic liquor for human consumption. Even these products are also kept outside of the GST purview. That's it. So we all know alcoholic liquor for human consumption will be outside of the GST purview. Now they have added one more thing here. Not the final product alcoholic liquor for human consumption, even a product called undenatured extra neutral alcohol or even rectified spirit, which will be used in the manufacturing of alcoholic liquor for human consumption, even on that product also, there will be no GST. It will be outside of the GST purview. That is one small amendment they have here. Okay, so going forward, even on undenatured extra neutral alcohol or rectified spirit, which will be used in the manufacturing of alcoholic liquor for human consumption, even on that products also, they will be outside of the GST purview. On that also, GST will not come. Clear? That's it. Then we have 10 subsection 5, which is talking about the composition levy and all. See here, at many places you will find a few sections getting updated, a few sections getting amended, and in many sections they have given reference to section 74A. See, section 74A is a new section which was introduced in the GST, which is talking about this penalty proceedings and assessment proceedings and all. Okay, so what is this section 74A? That we will discuss at the CA final level. What is section 74A? That we will discuss at the CA final level. But this is also one of the assessment or recovery procedure which involves a fraud and all other cases. So wherever punishments are there, wherever the things are there, wherever punishment and penalty related provisions are there, in all that sections, earlier there used to be reference of only section number 73 and 74. But now, since a new section 74A has been introduced, at many places they have even added reference to section 74A. This was new section introduced under the GST Act, but at the CA inter level, that is completely irrelevant. Why? Because what is section 74A? We will discuss it at the CA final level, not at the CA inter level. So wherever these amendments you find where a section will be updated only to add reference to section 74A, various sections they have given even in our CA inter material also, but all that is not relevant for the examination. Just you can have a look and ignore it. So there is one slight amendment in section 10 subsection 5, which is talking about composition levy, which says that in case if you are not eligible for composition levy either under 10 subsection 1 or 10 subsection 2A, but even though you are not eligible, still you are opting and paying the tax under composition levy, then the department can take action against you under section 73, 74. Earlier this used to be there. Now since a new section has been introduced, even the authorities can take action against you under section 74A also. This is the only amendment, but as I've told, not relevant for the CA inter. This amendment we will learn it at the CA final level. Okay, so if you are a person opting for composition levy, even though you are not eligible, then action will be taken against you in section 73 also, under section 74 also, and even under section 74A also. What is 74A? We need not worry about it. You can ignore it. Now, in the existing RCM provisions, so if you all are aware, in the charge of GST, we have understood a list of services. Mainly we have concentrated on the services. We have understood a list of services. Where tax will be required to be paid on reverse charge mechanism. What is the reverse charge mechanism? Generally under forward charge mechanism, service provider will collect the amount of GST from the recipient and pay to the government, deposit with the government. But under reverse charge mechanism, what will happen? Service recipient only will deposit the amount of GST with the government. So we have understood a list of services which are attracting GST under reverse charge mechanism, where service recipient himself is required to go and deposit the amount of GST with the government. To few services, there are amendments. What are they? Like if you see in entry number 4, when it comes to providing of the sponsorship services. When it comes to providing sponsorship services, earlier also there used to be reverse charge mechanism. So earlier what used to say is, if any person providing sponsorship services to a recipient, and the recipient is either a body corporate or partnership firm located in the taxable territory, then on that services RCM will become applicable. Recipient is only required to deposit the GST amount to the government. To that provision, they have made one change. What they have made a change is, if the supplier of service, the person who is providing sponsorship services, if it is other than body corporate, supplier must be other than body corporate, then only reverse charge mechanism. If the supplier of sponsorship services is a person other than body corporate, and if the recipient is a body corporate or partnership firm, then only this will get covered under RCM. Okay, so if I give you one example, say for example, there is a company X Limited. This X Limited is providing sponsorship services to another company Y Limited. Service provider, service recipient, and the service which is getting provided is sponsorship services. Earlier, before amendment, what used to happen is, if any person, if they are providing sponsorship services to a recipient who is either a body corporate or partnership firm, it used to be covered under reverse charge mechanism. So before amendment, even on this service also, recipient is required to deposit the amount of GST with the government. But now after amendment, what is the amendment they have done is RCM will become applicable only when the supplier of services other than body corporate. But in the given case, the supplier of sponsorship services is a body corporate. So that's why here it will not fall under RCM. Here it will go to forward charge mechanism only. Okay, which means what? Say for example, if for this sponsorship services 10 lakh rupees is the consideration, this service provider will collect the amount of 10 lakhs along with the GST and he will only pay it with the government. So before amendment, this case would have been covered by RCM, but now it is no longer covered under RCM. It will get covered under forward charge mechanism. Okay, so that is what one change here in the sponsorship services. So tell me, when sponsorship services will get covered under reverse charge mechanism? Supplier of service should be other than body corporate. The recipient must be either a body corporate or partnership firm. So if the recipient should be body corporate and partnership firm, so once again, if you make out the conditions, so sponsorship services, when RCM, condition number 1, supplier of service other than body corporate, can be partnership firm. Can be partnership firm, still RCM will become applicable, but only condition what they have told us, supplier should not be body corporate. So supplier should be other than body corporate. Number 2, second condition, recipient should be either body corporate or even it could be a partnership firm. So if both the conditions are satisfied, then RCM, even if any of the condition gets violated, then no RCM, FCM. Clear? That's it. Next, even in 5AB, renting of residential dwelling, there also there is one amendment here. Let us try to understand what they are trying to say here. Services by way of renting immobile property other than residential dwelling. Sorry, this is other than residential dwelling. And if the supplier is unregistered person and if the recipient is a registered person, then on that case, RCM will become applicable. So what is the provision earlier? So this red is an amendment. This red is an amendment. So previously this provision used to be there. And this talks about 5AB, services by way of renting of immobile property other than residential dwelling. So say for example, you have one commercial property. So there is a person who owns a shop, who owns a commercial shop. And this shop is given on rent to a service recipient. Earlier, what the provision used to say is, if the supplier is unregistered person and if the recipient is a registered person, if the recipient is a registered person, then this service will get covered under reverse charge mechanism. Say for example, if the rent is 10,000 rupees and if the supplier is unregistered, now on this 10,000 rupees, this service recipient is required to pay the amount of GST at the applicable rate. And earlier what they used to say is, if the recipient is a registered person, either he is opting for GST under composition levy, or if he is person opting for composition, or he is a person registered under regular scheme, not composition, still whether he is a registered person under composition or he is not a composition dealer, still he is required to pay the GST under reverse charge mechanism. But now they have made the amendment. So what is the amendment is, recipient is a registered person, but he is such a person who has opted under composition levy. If he is a person who has opted for composition levy, then RCM will not become applicable. Then RCM will not become applicable. So the final provision now after amendment is, so if there is a service provider who is providing the services of renting of commercial property other than residential dwelling, if any property is given on rent, if the service provider is unregistered person and if the service recipient is registered person but he has opted for composition levy, then RCM will not become applicable. However, if the recipient is a registered person, he has not opted for composition levy, he is opting for regular scheme only, then RCM will become applicable. Then he is required to pay the GST under reverse charge mechanism. Able to understand everyone? So this is what one thing you need to remember. So from this also a question you might get it. So very simple provision. So what is the amendment here? Services by way of renting of immobile property other than residential dwelling. Service provider is unregistered person, and if the service recipient is a registered person, that too other than a person who has opted for composition levy, then RCM will become applicable. So final implication is, if the recipient is a registered person but he has opted for composition levy, then RCM will not become applicable. If the recipient is a registered person but he has opted for regular scheme, then RCM will become applicable. Understood? So these are the two amendments here. Next, we have this. One more clarification is there. Clarification whether DDA, Delhi Development Authority, can be treated as a local authority under GST law. So there is one issue before the GST department where a confusion has come whether DDA should be treated as local authority and whether RCM will become applicable for them or not. A issue has come before the GST department to clarify that. They have given this circular. Now, what is this circular about is, so as we all are aware, services supplied by local authority to a business entity are taxable under reverse charge mechanism. Services which are provided by local authority to a business entity are taxable under reverse charge mechanism. So say for example, there is a local authority, they are providing some services. So let me draft it here. So there is a local authority. If this local authority is providing services, so service provider is a local authority, and if the service recipient is a business entity, now on that services RCM will become applicable. Say for example, 1 lakh worth of services are getting provided. So on this 1 lakh worth of services, say for example 18% is a GST. Now service recipient is only required to deposit that 18,000 rupees of GST with the government. So this is there. Now what is the doubt here is issue. The issue which arose for consideration was whether DDA, Delhi Development Authority, can be treated as local authority under GST law. So say for example, there is one Delhi Development Authority. They have provided some services to the business entity. Now, will this Delhi Development Authority, will this DDA, will it be considered as local authority? See, if the answer is yes, then business entity is only required to pay the GST under reverse charge mechanism. If you say it as no, then this will not be a local authority. Here RCM will not become applicable. This DDA only, along with the consideration, they should also collect the amount of GST and they have to pay the GST to the government. So now the question come here is whether DDA, will it be considered as local authority or will not be considered as local authority? Now ultimately what is the clarification they have given is DDA will not be considered as local authority. DDA will not be considered as local authority. So resultantly, if the DDA is providing any services to the business entity, on that RCM will not become applicable. DDA only should collect the GST from the recipient and deposit it with the government under forward charge mechanism. That is what the clarification given here. So if you read it, clarification, local authority. First of all, what do you mean by local authority? Local authority means an authority which is similar to the elected self-governing body such as municipal committee and which is entrusted with the control and management of municipal or local fund. They only will be treated as local authority, and none of these functions are done by Delhi Development Authority. So thus it has been clarified that DDA cannot be treated as local authority under GST law as DDA does not meet the requirements of local authority as per section 2 subsection 69 of the CGST Act. So that is the final summary here. DDA is not a local authority. So if DDA is providing services to the business entity, RCM will not become applicable. Forward charge mechanism only will become applicable. So that is the final clarification. DDA will not be considered as local authority. Perfect. Now let us try to understand the amendments in the place of supply chapter. Clear everyone? Done with the first two chapters. Very easy, very simple. In the charge of GST, there is nothing such a significant things which require deeper understanding. But in the supply chapter, there are significant discussions. Now we will try to proceed further and understand the amendments in the place of supply chapter. Shall we do it, everyone? Let us do it. Right. So what are the amendments in the place of supply chapter? For this, let me give you a little background here. So guys, if you remember how to determine place of supply for supply of services. So we all know that section 12 of the IGST Act will talk about how to determine the place of supply for supply of various services. So we all know from 12 subsection 3, each subsection will talk about specific services and it will tell you how to determine the place of supply. Like 12 subsection 3 will say how to determine place of supply for services in relation to immovable property. So 12 subsection 4 also will talk about specified services. So we all know from 12 subsection 3 till 12 subsection 14, for all the specified services, how to determine place of supply, we have specific guidelines. Then we have residuary clause or default clause, 12 subsection 2. If any service is not getting covered anywhere from other subsections, starting from 12 subsection 3, you will start looking. You are providing certain services, and if it is nowhere getting covered in the specified services, then you will come to the 12 subsection 2 default provision, how to determine place of supply for default services. So that says that as per 12 subsection 2, how to determine place of supply is, first we need to check is the recipient registered person or is the recipient is an unregistered person. If the recipient is a registered person, location of the recipient will become the place of supply. In case of unregistered person, we need to check whether address of the recipient is available. So if the address of the recipient is available, then location of the recipient will be place of supply. If address of the recipient is unavailable, then the location of the supplier itself will become the place of supply. This is not something new which I am teaching you. Just I am making you recollect the provision which is there under 12 subsection 2. So if there is some provision, if there is some provision of service which is not getting covered anywhere else, then we will come to 12 subsection 2 to determine the place of supply, which says, as per 12 subsection 2 clause A, it says that if the recipient is registered, location of the recipient. If the recipient is unregistered, then we need to check whether the address of the recipient is available. If it is available, location of the recipient will become place of supply. If it is not available, location of the supplier will become the place of supply. Okay, so this is what 12 subsection 2 says. Now, if you go to the provisions relating to tax invoice and the related rules, if you go to the provisions relating to tax invoice and the related rules, so we have certain provisions talking about tax invoice in special cases. So if you come here, so if you go through the provisions of 31 subsection 2 and 46 sub rule F. So if you go to that rules, there are some provisions relating to invoice. There are some details, there are some guidelines relating to issuance of the invoices and details which are required to be included in the invoices. So let us try to recollect that special provisions. So when you read these provisions of the section, which it says is, if you read the first line, it has been clarified that on co-joint, that means on a combined reading of 12 subsection 2 clause B and section 31 subsection 2 of the CGST Act and the rule 46 sub rule F of the CGST rules, if you read all these provisions collectively, it will lead to a conclusion. You will arrive at a conclusion that in respect of supply of services made to unregistered persons, irrespective of the value of the said supply, the supplier is required to mandatorily record the name of the state of the unregistered recipient on the tax invoice in cases involving supply of online money gaming or supply of taxable services through an electronic commerce operator or supply of online information and database access or retrieval services. So what they have told here, so when we do the combined reading, so what it gives us the conclusion is, if there is a service provider, okay, and if there is a service recipient who is an unregistered person, and if certain services are getting provided, what services? Online money gaming services, okay, and supply of taxable services through e-commerce operator or supply of OIDAR services. So if there is a service provider and if he is providing any of these services, which are services? Online money gaming services, or he's supplying any taxable services through the e-commerce operator, or he's providing OIDAR services to a recipient who is an unregistered person, then in the invoice, he must compulsorily record. The supplier will give tax invoice, no? So in that tax invoice, it becomes mandatory for the supplier to record the state of the recipient. He need not record complete address of the recipient, but it must contain the recipient's state, to which state the recipient belongs. That is, name of the state must be compulsorily mentioned irrespective of the value of the service. Irrespective of value of the service, if a service provider providing which kind of services? Providing three kinds of services. What are the three kinds of services? Online money gaming services, taxable services through the e-commerce operator, and supply of OIDAR services to a recipient who is unregistered person. It is mandatory, irrespective of the value of the supply, it is mandatory to compulsorily mention the name of the state of the recipient in the tax invoice, and that itself will be deemed as address of the recipient. If you just record the state of the recipient who is an unregistered person, that itself will be considered as address of the recipient, and accordingly the place of supply will be determined. So say for example, there is one recipient, he's playing one game. Say for example, he's playing a game of Dream 11. So it is an online money gaming. Recipient is an unregistered person. Say for example, he belongs to Delhi. He's an unregistered person. Now service provider is there. The Dream 11 is a service provider. They are providing online money gaming services to a recipient who is in Delhi. Now for that they will give invoice. In that invoice, compulsorily they have to mention the state of the recipient. They have to mention that the name of the recipient and state of the recipient as Delhi they will mention. Say for example, this Dream 11 is a supplier who is located in Mumbai. So location of the supplier is Mumbai. And in the invoice, they have recorded the state of the recipient and they have recorded it as Delhi. So location of the recipient will be considered as Delhi. Location of the recipient is considered as Delhi. Now this will get covered under, for determining place of supply, this will get covered under 12 subsection 2. Why? Because this service will not fall under any of the specified category. And 12 subsection 2 clause A says that if the recipient is registered, location of the recipient will become place of supply. Clause B says that if the recipient is unregistered person, then we need to check whether address of the recipient is available or address is not available. In the given case, address is available. Why? Because they have recorded the state of the recipient, which is Delhi. So since address is available, location of the recipient itself will become the place of supply. So the place of supply will be Delhi. So location of the supplier is in Mumbai, place of supply is in Delhi. It will be considered as interstate supply. On this transaction, IGST will be levied. On this transaction, IGST will be levied. So if you read it further here again, so first we have read this provision by doing a co-joint reading of all the provisions. In case of specified services, if they are provided to unregistered person, irrespective of the value of the supply, they need to compulsorily record the state of the recipient. And recording of the name of the state of, if you read this B point, recording of the name of the state of unregistered recipient on the tax invoice in respect of such a supply of service shall be deemed as address on record of the recipient for the purpose of determining place of supply. So this is state, we will use it for the purpose of determining what will be the place of supply. Very good. Next. Accordingly, in such cases, the place of supply of such services shall be considered as the location of the recipient of the service as per the provisions of 12 subsection 2 clause B. That's what we have done. So since location of the recipient is Delhi, that we will consider it as place of supply. Next, combined reading of the definitions of the electronic commerce and electronic commerce operator as per 2 subsection 44 and 2 subsection 45 along with rule 46F provides an understanding that all services supplied to unregistered recipients over digital or electronic network, either by the supplier using his own digital or electronic facility program, or through any other electronic or digital platform owned or operated by an e-commerce operator, will be covered under this provision. So now here comes the confusion why this circular has been given. Now here comes the point. Sir, you told that if services are getting provided through e-commerce operator or through e-commerce, then for that services you told that in the invoice, if the recipient is unregistered, irrespective of the value of the supply, you have to record the state of the recipient. Sir, is it applicable for all services? Is it applicable for all services? All services getting provided through e-commerce operator? 100% yes. So previously people used to have confusion that, say, they used to feel that only for certain services they need to mention the state of the recipient. Like they used to feel that when food services are getting provided, restaurant services are getting provided through e-commerce operator, they used to record the state of the recipient. So like that, they used to feel that only on specified services they have to mention the state of the recipient. So what they used to do is, for certain services which are provided through e-commerce operator, they don't used to record the state of the recipient. Some vendors have started doing it. Say for example, I'm a recipient, unregistered. I have taken subscription of e-newspaper. So the Hindu is that they have an app, on that they provide news, and they have premium version. If you want to read the full articles, you need to take the subscription. E-newspaper, they have to take the subscription. So now this recipient is an unregistered person. The Hindu is a service provider. They are providing the services through e-commerce. They are providing services through e-commerce. See, when I say e-commerce, e-commerce can be a third party e-commerce, or if a vendor is providing the services through their own platform, that is also a e-commerce operator only. That is also a provision of service through e-commerce. So the Hindu is having their own website. On the website, they are providing the services of e-magazine. Now what these people used to do is, they used to feel that, okay, this is not the service getting covered as per that sections. So they don't used to record what is the state of the recipient in the tax invoice. But now they have clarified that even this e-newspaper services also will get covered here. This is also supply of taxable services through e-commerce platform or e-commerce operator. And here also the recipient is unregistered person. And in the tax invoice, what the service provider will give, they have to compulsorily mention the name of the state. They have clarified it. Okay. Not just that. Say for example, I'm a recipient. Sir, I'm paying for OTT platform. There is some OTT platform. So for that OTT platform, I'm paying the fees. And the recipient is unregistered person. There is a service provider. Sir, in this case also, on the tax invoice, is it mandatory to record the state of the recipient? 100% yes. So when they say that you are required to include the name of the state of the unregistered recipient in case of services provided through e-commerce operator or e-commerce, it is referring to all services, not just on few services. Any service which is getting provided through e-commerce or e-commerce operator, for all the services, you need to include the name of the state of the recipient if he is unregistered. That is mandatory for all services, not just for few services. That is what the whole matter of the clarification. So if you start reading it, so here comes the most important point. It is for all services. All services supplied to unregistered recipients over digital or electronic network, either by the supplier on his own platform or through another e-commerce platform. All that doesn't matter. On all services which are supplied to unregistered recipients or digital or electronic network will be covered under these rules. So it is accordingly clarified that provisions of provision to Rule 46 sub Rule F, nothing but that recording of the name of recording of the state of the recipient, shall be applicable in respect of all the online supplies of services supplied to an unregistered recipient, in addition to online money gaming and OIDR services. So for online money gaming, OIDR, anyhow you will record. But in addition to that, for all services supplied through e-commerce operator or e-commerce platform, for all that services, you need to include the name of the state. So some of the examples of the services covered are subscription of e-newspapers and e-magazines, online subscription of entertainment services like OTT platforms, online telecom services, digital services through mobile applications. Like for example, if you are receiving any fitness training services or app, there is one popular fitness trainer, he's providing you fitness training or he's giving you guidance for your fitness or mobile application. If you purchase a plan, every day he will send you the workout schedule, every day he is going to send you this diet plans and all. That is also supply of services through e-commerce platform only. On that also they have to compulsorily record the state of the recipient, to which state the recipient belongs. They have to record it, provided the recipient is an unregistered person. So everything will get covered here. Therefore, in respect of the following cases of supplies to unregistered recipients, the suppliers are mandatorily required to record the name of the state of the recipient on the tax invoice, irrespective of the value of supply of the services, and to declare the place of supply of the said service as per the location of the recipient, as per 12 subsection 2 clause B. So, and who will get covered here? Supply of any such online or digital services through e-commerce platform or OIDR services, or even online money gaming services. So the whole subject matter of the circular is this point. This is the point. This is the main whole subject matter of this circular. So it says that all services which are supplied to unregistered recipients, on every such services which is getting provided to unregistered recipients through online platforms, for all that services, recording the state of the recipient is very, very important, mandatory. This is the whole subject matter of this entire circular. So these two are very, very important. And this F point, if you read these 3 points, that will be enough. You would have covered the entire circular. Clear, everyone? So this is one clarification given in the place of supply chapter. Now let us try to proceed further. So let us now proceed further and try to understand some amendments given in the exemptions chapter. So one new section has been introduced. Section 11A has been introduced. Very interesting section. So this is actually the section amended. This new section has been added in the GST Act to provide relief to the taxpayers. So generally we expect amendments to do extra taxation to favor the governments, right? Generally we expect the amendments in the GST Act or something when we feel that when the government feels that they are losing revenue, they give the amendments, right? But this is one such exception where the government has given amendment to provide relief to the taxpayers. So let me try to explain with the help of example what this all amendment about. So if you understand the logic, remembrance become very easy. So let me try to explain the logic for you. See, say for example, government has given one exemption. Government has given exemption. Okay, say for example, they told that exports are exempted. Just example, guys, these are not literal provisions. Just I'm giving you examples to make you understand. Say for example, government has given one exemption that if you are doing exports, they will be exempted. You are not required to pay any GST. Okay. So now in the market, generally in the market, in the normal market, what is happening is, say for example, there is one intermediary, agents are there, export agents are there. There are export agents. Now what these people will do is, if there is an exporter, if they want to export some goods out of the country, there will be so many complications. There are so many documents, there are so many things, there are so many formalities which are required to fulfill, which exporters might not be aware. So what this exporter can do is, they can go to the export agent. This export agent will get all the formalities done. All the formalities they will fulfill, whatever formalities relating to export are there, that they will fulfill it. They will do all the documentation, and they will clear all the process, and they will help the exporters to export the goods out of the country. So this is what the services which is getting provided by the export agents. They are acting as an intermediary which will help the exporters to make them export the goods. But in the GST Act, there is one general exemption that exports are all exempted. Now, everybody in the industry, all these export agents who are in the industry, it is a general practice. Everybody is feeling that even the services of this export agent also will get covered under the export, and they are not paying any GST on it. What is the general practice in the industry? Everybody in the industry, not just this one agent, everybody in the industry, whoever is doing that export agency business, everybody is feeling that whatever intermediary services they are providing, those are also falling under the exports definition only, and no one is paying the GST on it. They are feeling it as exempted. Everybody, it is a general practice in the entire industry. But what is the correct provision? What is the correct interpretation is only the export which is done, only the goods which are going outside of India, only the services which are going outside of India, those are only exempted. These intermediary services are not getting covered under exemption. They are not exempted. If you interpret the provision correctly, export agency services, these intermediary services for which there is no exemption at all. But it is a general practice. Everybody in the industry is feeling that this export agency services is also exempted, and no one is paying GST on that. No one is paying GST on that. Now the government has realized it. Now the government has educated these people. Boss, your intermediary services are not falling under the definition of exports. This is not a definition this is not getting covered under the definition exports. Actually, you are required to pay the amount of GST. Actually, you are required to pay the amount of GST. And what these proper officers have started doing is they have started calculating the GST liability of these people. So what they have done is, okay, from last 2 years, you are treating your services as exports, you are not paying GST. And from the last 2 years, they have calculated what is the value of the total services they have provided. Say, for example, it has come to some 50 lakh rupees. And now the GST officers have started demanding. So from the last 2 years, you are providing export agency services. On that 50 lakh rupees, you did not pay any GST. Now you pay the full amount of GST on the entire 50 lakh rupees. So some 9 lakh rupees of GST they are demanding now. So don't you think it is a trouble for them or not? Because it is not purely their mistake. It is a general practice in the industry. Everybody is feeling this will also fall under exports, and no one is paying GST. But now the GST proper officers have started going to their premises and started asking, boss, whatever you are doing is wrong. From the last 2 years, you have treated it as exports and you are not paying any GST. But now exemption is not applicable for you. You have done the wrong interpretation. Now whatever balance GST is there, you pay the complete amount of GST. This started creating so many hardships for the people in different industries. So that's why now what they have done is they have introduced section 11A, which says that if the government wants, on the recommendations of the council, they can grant relief. They can come forward and grant relief, provided if it is a general practice, everybody is doing it. So in order to avoid these hardships and all, what government can come and say is, okay, till now you have not paid any GST, treating your service as exports. No, till now whatever you have done, you need not pay any GST. Going forward, whatever you are providing this intermediary services, on that only if you pay GST, that will be enough. On that only you will pay. If you pay GST, it will be enough. We will not dig your past. We will not dig your past. So the government can give relief case to case basis. On the basis of recommendations of the council, government can give relief for the transactions which have already taken place. They might not demand any extra amount of GST from you from the transactions whatever have already taken place. This relief can be granted on the basis of recommendations from the council. This is what one part of section number 11A says. So as I've told you, this is one such amendment which has been given to provide relief to the taxpayers, not excess collection mechanism from the government. One more thing is also getting covered here. One more provision also will get covered here under section 11A. So say for example, there is one industry, say for example, construction industry is there. In the construction industry, they are manufacturing one product. There are different manufacturers. They are manufacturing one product. They are classifying it under some HSN. Say for example, 8384. Under this HSN, everybody is classifying this manufactured product and they are collecting GST at the rate of 12%. Everybody in the industry is manufacturing certain product and everybody they are classifying it under HSN code of 8384 and they are collecting GST at the rate of 12%. Everybody in the industry is they are doing it. It is a general practice. It is a what? General practice. No fraudulent intention. Everybody is doing it. But what is the actual interpretation is this product should not go to the category 8384. It should go to the category 8386, which should have attracted 18% of the GST. Which should have attracted 18% of the GST. The correct rate of GST is 18%. But many people, it is a general practice in the industry that many people are classifying it under 8384 and they are collecting only 12% of the GST. Everybody is doing it like that only. But correct interpretation is it should attract 18% of the GST. Now, one proper officer, one GST officer has went to that manufacturer and told, hey, from the last 2 years, you are manufacturing this product and you are only collecting 12% of the GST. Actual rate of GST is 18%. You have short paid 6% of the GST. In the last 2 years, you have made 2 crores worth of turnover. So on that 2 crores, you have paid only 12% of GST, but actual rate is 6%. That difference 6% you pay it now. The difference 6% you pay it now. 12 lakh rupees you have to pay it now. Now this also will become troublesome for many manufacturers. Now here also under the power given under section 11A, on the basis of recommendations of the council, government can say that okay, you need not pay that 12 lakh rupees. We will give you relief because you are doing it as a part of general practice. No, there is no intention for you to cheat us. It's a general practice. You have done it. Okay, we will not demand from you this 12 lakh rupees, whatever has happened. Going forward, if you pay 18%, it will be enough. We will not dig your past and make you compensate for whatever has been done till now, because it was a general practice. Everybody is doing it. So to give relief in 2 cases where people are treating a category of supply as exempted and they are not paying GST on it as a part of general practice. Number 2, the people are paying GST but at a lower rate than the actual rate. In those cases, government, on the basis of recommendation from the council, they can exempt you. They might take a decision not to collect that extra amount for whatever has already happened in the past. Understood? That is what section number 11A is all about. Very interesting provision. So if you read it here, power not to recover GST, not levied. That means you are treating it as exempted and you have not levied it. So they cannot recover it from you. So this in the case of complete exemption, or short levied. Short levied is the second case, whatever I have told. So actual rate is 18%, but you have collected only 12%. So power not to recover the GST, which is not levied or short levied as a result of general practice. So what does that say? Notwithstanding anything contained in this act, if the government is satisfied, that a practice was or is generally prevalent regarding levy of central tax, including non-levy thereof, on any supply of goods or services or both. So there is a general practice that everybody is not collecting tax on certain product, or such a supplies are liable to GST in cases where according to the said practice central tax was not or is not being levied. Once again, exemption. So actually such supply will attract GST, but it is a practice in the industry that it is not getting collected at all, or a higher amount of central tax than what was or is being levied in accordance with the said practice. So as per the general practice, everybody is collecting a lower rate of GST, but it actually attracts higher rate of GST. In that cases, the government may, on the recommendations of the council, by notification the official gazette, direct that whole of the central tax payable on such supplies, or as the case may be, the central tax in excess of that payable on such supplies, but for the said practice shall not be required to be paid. So the government can pass an order that you are not required to pay that amount which has not been paid, on which the central tax was not or is not being levied or is being short levied in accordance with the said practice. So terminology might sound complicated, but this is the provision behind it. The government can lose their power. The government can give up their power. Okay, we will not recover the amount which has not been collected or which has been short collected. We will not demand that payment from you. So that is once again case to case basis. They will take that decision. Okay, to provide that relief, section 11A has been introduced. Now, in the existing in the already existing exemptions, there are a few changes there. In entry number 25A, there is some wording error which the government has realized. So we have an exemption which says that supply of services by way of providing metering equipment on rent, testing for meters, transformers, capacitors, releasing electricity connection, shifting of meters, these are all exempted, which are either incidental or ancillary to the supply of transmission. Earlier they used to use the phrase "and" here, that they have replaced it with "or." So or distribution of electricity provided by electricity transmission or distribution utilities. By any of this, if these services are getting provided by any of this, in relation to any of this, then it will be exempted. Previously there was a drafting mistake. They used to use the phrase "and" instead of "are." End will become cumulative, right? So it is not a cumulative condition by any of this or in relation to any of this. If these services are providing metering equipment or testing for meters, transformers, then it is exempted. So just there was a drafting mistake that they have corrected it and they have replaced it with or. That's it. Then in the entry number 69 also we have an amendment. Any service, see, generally services provided by these people are exempted. Who? By National Skill Development Corporation, National Council for Vocational Training, awarding body recognized, assessment agency, training body. These 5 used to be there earlier. Now they have told that even services provided by a training partner approved by National Skill Development Corporation is also exempted, provided those services are in relation to National Skill Development Program, Vocational Skill Development Course, or any National Skill Qualification Framework. So all the provision will remain the same, but to the service provider who can enjoy the exemption, they have added one more point here. Even a training partner approved by National Skill Development Corporation, if the service is provided by them in relation to these activities, that will also be exempted. So this is one extra service provider added to that exemption list here. Okay, next. Once again, we have one more exemption relating to insurance. See here, with regard to insurance sector, at various places we have amendments. Even in the exemptions also, with regard to the insurance sector, there is one more amendment, one more exemption is there. So let us try to understand what is that exemption relating to the insurance sector. So what does this new exemption read? So it's introduced by way of entry number 36B. Let us try to understand what does the 36B say. Services of insurance provided by Motor Vehicle Accident Fund, which is constituted under section 164B of the Motor Vehicles Act 1988, against a contribution made by insurers out of the premiums collected for third-party insurance of the motor vehicle. Right. Sir, what are they trying to say here? Here also we'll try to understand the background first. So say for example, there is one person who purchased a new car. He purchased one new car. So as we all are aware, as per this road transportation rules and regulations, the moment you buy any motor vehicle, either you buy a vehicle, two-wheeler, or you buy a car, you need to take mandatorily third-party insurance. That means if you go and hit someone with this car, for that person, the person who has been hit, for him to compensate for his medical expenses, to provide compensation to him, it is mandatory for you. If you purchased a vehicle, either two-wheeler or four-wheeler, you have to compulsorily take the insurance policy, third-party insurance we call it. What is third-party insurance? So basically, as I've told, if you go and hit any person with this car, that person who is hit, who was being hit, he needs medical expenses for his treatment and all, no, that insurance company will compensate. So it is mandatory for you to take a third-party insurance. So you purchased a car, you went to some insurance company. Say for example, Tata Insurance. So you went to Tata Insurance, and from that Tata Insurance company, you have taken a third-party insurance policy. So they have given you insurance policy. They gave you insurance policy, and for that insurance policy, they will collect insurance premium for you. Say for example, you paid 10,000 rupees of insurance premium. You paid how much premium? 10%. Sorry, 10,000 rupees of insurance premium they have paid. And this is a service provider. You are the service recipient. And it is a supply of service. This transaction will attract GST. Say for example, applicable rate of GST is 18%. So along with the premium of 10,000 rupees, 11,800 they will collect. Total 11,800 rupees they will collect. Out of that, 10,000 insurance company will keep. 1,800 rupees they will go and deposit the amount of GST with the government. Now, as per the Motor Vehicle Act, there is one fund created, MVAF, Motor Vehicle Act Fund or something. What is the name of the fund? Yeah, Motor Vehicle Accident Fund, which has been created. And as per the Motor Vehicles Act, every insurer, certain percentage of the premium which they have collected from the recipient, certain percentage they have to contribute to MVF. As per the Motor Vehicles Act, these insurers are there, no, who has provided third-party insurance to that vehicle owners. From them, they have collected a premium, no. In that premium, certain percentage, say for example, 1%. It is not exactly 1%, for example, sake I'm using. So as per the Motor Vehicles Act, every insurer, from the premium which they have collected from their customers for third-party insurance, out of that, certain percentage they have to contribute to MVF. Say for example, 1%. So if I calculate that 1%, 100 rupees. So as per the Motor Vehicle Act, this Tata Insurance company, they have to contribute 100 rupees to the Motor Vehicle Accident Fund. And why they are contributing that is, out of that fund, what this MVF will service. So out of that contributions, whatever they have received from the insurers, if some accident happens, if some vehicle is hit, if some vehicle has hit one person, and you can't trace the vehicle owner, if you can't trace the vehicle who has hit that person, to compensate for those accident cases, MVAF will contribute. It is actually a social welfare activity. So if vehicle is identifiable, say for example, there is one person, he has been hit by a car. See, if he is hit by a car, if the car is able, if you are able to find out the car, which car has hit that person, why he has expired, because of which he has died. Now, if you are able to identify that car, you can find out which is the insurance party. So, which is that insurance provider who has given the policy, and that insurance company will compensate for that medical expenses and all. But sometimes what will happen is there will be hit and run cases. There will be hit and run cases where a person will be hit and the vehicle will not stop and the vehicle will leave. In that case, you will not be able to trace the vehicle. You will not be able to trace the vehicle. In those cases, since you are unable to trace the vehicle, you will not be able to find out which insurance company has given the policy for that. For all that cases, MVAF, from this fund, the amount will go to the medical treatment of this person. Okay. So for that purposes, MVAF is asking, as per the Motor Vehicles Act, every insurer from the premium whatever they have collected for the third party insurances, certain percentage they have to collect it to MVAF. In return, MVAF is providing the services. In the name of this claiming and all, they are providing the services. Now GST officers have started collecting GST on that. Why? Because here MVAF is a service provider, insurance companies will be the service recipients, and they are collecting the contribution in the form of this amount, and he has considered this as supply of service, and GST officers have even started collecting GST on this 100 rupees also. Even on this contributions also they have started collecting GST. But don't you think this is something more than a social activity than the business? It is actually a social welfare activity, not a business. Why MVAF is collecting this premium? They are collecting this contribution so that if there is any hit and run case where vehicle can't be traced, they want to compensate for that medical expenses. So it is a kind of social welfare activity. So that's why government has given a exemption. A new thing has been introduced, 36B entry they have introduced, and they told that this is not subject to GST. This is exempted. This contribution which MVAF is receiving from the insurance companies as a percentage of the contribution of whatever they have received, that will be not subject to GST, that has been exempted. So this is what this is what entry number 36B says. So say for example, with this example, we are with the help of the example, whatever I have used, you are able to understand it in a better manner. So if I read it, services of insurance provided by the Motor Vehicle Accident Fund constituted under section 164B of the Motor Vehicles Act against the contributions made by insurers out of the premium which they have collected for third party insurance of the motor vehicles, it is exempted. On that, GST will not come. And they have given what is the meaning of what is the definition of the term insurer. Not important from the examination perspective. Just here they have used the phrase insurer. No, sir, what do you mean by insurer? Sir, who will get covered under insurance definition? So they told that insurer will have the same meaning as assigned it under Insurance Act. And the Insurance Act says insurance means an Indian insurance company, a statutory body established by an act of parliament to carry on insurance business like Life Insurance Corporation, LIC, or it could be an insurance cooperative society, or a foreign company engaged in reinsurance business through a branch established in India. Today we have even foreign companies also providing insurance services in India. So all this will come under insurer definition. So not important from the examination perspective, just they are telling you what is the meaning of the term insurer. Clear everyone? Now let us come to one more clarification in the exemptions which they have given. Clarification in respect of applicability of GST on facility management services provided to Municipal Corporation of Delhi headquarters. Now, one more case has come before the government. So there is a Municipal Corporation of Delhi. Okay. Now, as we all are aware, when it comes to municipalities and panchayats, we have an exemption. If you are providing any services, say for example, if there is a service provider, if you are providing services to any municipality or panchayat in relation to any activity entrusted under Article 243G and Article 243W of the Constitution, then that services are exempted. So if you are a service provider, if you are providing any services to a municipality or a panchayat in relation to any activity entrusted under Article 243G or Article 243W, then those services are exempted. We all know this. But now one thing, so what kind of services will generally covered here is, say for example, a municipal corporation is there. See, this municipal corporation, one of the function which was entrusted to the municipal corporation is waste collection. It was the function which is given under Constitution. So they are required to take care of waste collection. Now, what this municipal corporation has done is they have appointed you as a service provider. So what you are required to do on behalf of the municipality, you have to go and do the garbage collection. You have to go and do the garbage collection. So you are providing services to a municipal corporation in relation to a function entrusted to them under Article 243G or Article 243W of the Constitution. So your services will be exempted here because you are a service provider. You are providing services in relation to any activity which is entrusted to a municipality or local authority under Article 243G or Article 243W. So that service is exempted. Now, what is the issue which came before here is, so say for example, there is a Municipal Corporation of Delhi, if I'm not wrong. Yes. So there is a Municipal Corporation of Delhi. In the Delhi, there is a Municipal Corporation. Now, this Municipal Corporation is having so many activities which are entrusted to them under the Constitution. Now, what happened is this Municipal Development Corporation is having one office. They have an office premises, no? So in that office, housekeeping services are required. In this office, housekeeping services are required. Or in that office, there is a garden. So there is a gardening services, horticulture services, we call them. Okay. So there is an office. For that office, housekeeping is required. They have to keep that office clean and all. And there is a garden inside of the premises of that office. So that garden, horticulture, maintenance and all services are required to be provided. So now what they have done is there is one service provider. And this service provider is providing services to municipal corporation. What services he is providing? He is providing housekeeping services. So every day he will send some staff. They will clean the municipal corporation office. Or he will send some staff and they will do the gardening services. They will maintain the garden. Now here you are a service provider. You are providing services to the municipal corporation. Will exemption get covered here also? Will this service be exempted or will it be taxable? Will it be exempted or taxable? It will not be exempted, it will be taxable. Why? Because if you are providing services in relation to an activity which is entrusted to them under Article 243G or W, then only it will be exempted. See, here you are providing services to the municipal corporation's office for their housekeeping, gardening, horticulture services. It is not any activity which is entrusted to them under Article 243G or W of the Constitution. So here exemption will not be there. These services will become taxable. Able to understand the difference between the two? In the previous case, municipal corporation has been given the responsibility for garbage collection. In relation to that activity which is entrusted to them under the Constitution, that activity related services you are providing. So their exemption is there. But if you are providing services relating to housekeeping, gardening or maintenance of that office of the municipal corporation, that is not a function entrusted to them under Article 243G or W. For that, exemption will not be there. Those services will become taxable. That is what the clarification they have given here. So if you read the issue, Municipal Corporation of Delhi is receiving the services such as housekeeping, civil maintenance, furniture maintenance and horticulture, that is that gardening services and all, from a facility management agency for the upkeep for the maintenance of their office. The issue which arose for consideration, whether such services received by them, are they exempt from GST in terms of 3A of the notification? Clarification is, the services of facility management such as housekeeping, civil maintenance, furniture maintenance and horticulture agency for the upkeep of the office of MCD are not supplied in relation to performing any functions entrusted to a municipality under Article 243G of the Constitution. These are not covered under Constitution. Such services are not covered under the scope of the entry of 3A of the notification. Thus, it can be clarified that GST is applicable on the services provided by Facility Management Agency to MCD Delhi headquarters for upkeep of its headquarter building at applicable rates. So these services will be taxable at the applicable rate. GST has to be collected. Understood? Right. So this is what the amendments in the exemptions chapter. Now let us talk about time of supply. See, in the time of supply also there is one small clarification is there. So one small amendment is there, section 13 subsection 3, which is talking about how to determine time of supply in respect of receipt of those services which are covered under reverse charge mechanism. If you are a recipient and if you are receiving the services collected under reverse charge, which is taxable under reverse charge mechanism, what is the time of supply for you? So earlier they used to say that in case there is a service provider and you are a service recipient, you are required to pay the tax under reverse charge mechanism. Now what will be the time of supply? Earlier they used to say that in these cases, in these receipt of services taxable under reverse charge mechanism, time of supply will be either the date of payment or the date following 60 days, that is 61st day from the date of issuance of invoice by the supplier, whichever is earlier. This we already have. To that, they have added one more point. They say that, so if you start reading it here, in case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply should be earlier of the following three dates. What are they? The date of the payment as entered in the books of accounts of the recipient, or the date on which payment is debited in his bank account, whichever is earlier. Simply I will call it as date of payment. This provision already there. Or the date immediately following 60 days from the date of issuance of the invoice or any other document by whatever name called by the supplier, in case where invoice is required to be issued by the supplier. If the supplier is giving you the invoice, 61st day from the date of invoice. Or now they have added one more thing, the date of issue of invoice by the recipient in cases where invoice is to be issued by the recipient. See, to understand this amendment, we need to have some background provision. So guys, if you remember tax invoice chapter, if you remember, we have 31 subsection 3 clause F, which says that, say for example, there is a supplier, and if that supplier is providing any services to a recipient, and if that services are taxable under reverse charge mechanism, if the supplier is registered person, supplier only will give the tax invoice. If the supplier is registered person, supplier will give tax invoice. In case if the supplier is unregistered person, in that case, recipient will be required to do something called self-invoicing. Recipient is required to give invoice as per 31 subsection 3 clause F, which in our regular classes we have called it as self-invoicing. If the supplier is registered, he will only give you tax invoice. If the supplier is unregistered, recipient has to give invoice under 31 subsection 3 clause F. Now, what they are trying to say here is, earlier 13 subsection 3, they used to say that time of supply will be earlier of. They have given two dates. It used to be earlier of date of payment or 61st day from the date of invoice given by supplier. If the supplier has given you invoice from the date of invoice, 61st day. But they use the terminology date following 60 days. That means 61st day from the date of issuance of invoice given from the supplier, whichever is earlier. Now what they are trying to say is, now they have amended this. They say that in case of supply of services under reverse charge mechanism, time of supply will be earlier of three dates. What are the three dates? Number one, date of payment, either as recorded in the books of accounts or debited in the bank account, whichever is earlier, or 61st day from the date of invoice given by the supplier. If the supplier is giving invoice, 61st day from the date of that invoices. Now they have added one more thing here, the date of issuance of invoice by the recipient. In case if the supplier is unregistered, recipient will give the invoice. No, recipient will give invoice as per what? As per 31 subsection 3 clause F, the recipient will give self-invoicing. So whatever is the date of that invoice which is given by recipient, whichever is earlier of this, the three dates will become the time of supply. Able to understand? So earlier they used to give only two dates, either the date of payment or 61st day from the date of issuance of invoice by the supplier. But in some cases, recipient is also required to give the invoice, no, self-invoicing. So even that also they have brought into the provision. Now the amended rule says earlier of date of payment or 61st day from the date of the supplier's invoice or the date of issue of invoice by the recipient under 31 subsection 3 clause F. Whichever is earlier, that will be considered as the time of supply. Able to understand, everyone? So say for example, here the supplier has provided the services which are taxable under reverse charge mechanism. Say for example, for this, the recipient has made the payment on 15th of July 2025. Supplier gave the invoice on 10th of July. So from that 61st day, you have to calculate. Or say for example, for this service, the recipient has given the invoice, self-invoicing on 12th of July only. Now, whichever is earlier, which one will be earlier? 15th of June or 61st day from 10th of July? So 15th of July or 61st day from the date of supplier's invoice, 10th of July. Generally, it will not be there. Both will not happen simultaneously. Both supplier and recipient giving invoice might not happen simultaneously. So say for example, supplier did not give any invoice here. That's why the recipient has done the self-invoicing. On 12th of July, recipient has given the self-invoicing, whichever is earlier. Tell me which one is earlier. 12th of July will be earlier. That will become time of supply. So whenever this recipient is filing the return for the month of July, generally he will do it in the month of August. In that return, he has to declare this supply and pay the GST under reverse charge mechanism. Able to understand? So just this one extra point has been added. Now, regarding this invoice, earlier they used to say that, earlier under 31 subsection 3 clause F, they used to say this: in case if the supplier is unregistered, recipient has to give self-invoice. But there used to be no time limit. There used to be no time limit. Act used to be silent on time limit, but we have a related amendment in the tax invoice chapter where they have given time limit even for this self-invoicing also. Even for the self-invoicing also, they have given a time limit. So what is the time limit? That you will find it in the tax invoice chapter. So if you go to the tax invoice chapter, see here, amended 31 subsection 3 clause F. So a registered person who is liable to pay tax under subsection 3 or subsection 4 of section 9 shall, within the period as may be prescribed, issue an invoice in respect of goods or services or both received by him from the supplier who is not registered. Earlier they don't have this phrase. Earlier they did not give time limit, but now what they have told us, you have to give that self-invoicing within the prescribed time limit. Sir, what is that prescribed time limit? That time limit they have prescribed in rule 47A. New rule they have inserted. And what is the time limit within which they have to give the invoice? So if you see here, that recipient shall issue the said invoice within a period of 30 days from the date of receipt of the said supply of the goods or services, as the case may be. So from the date you have received that goods or service, within 30 days from the date of receipt, that recipient is required to do the self-invoicing. So thus, invoice is to be issued within a period of 30 days from the date of receipt of the said supply of the goods or services, as the case may be. So earlier there used to be no time limit. Now in the main section, they have included within the prescribed time limit, and to prescribe the time limit, they have given the rule number 47A, which says 30 days from the date of receipt of the supply. Next, and one more thing here, for the purpose of clause F, the expression supplier who is not registered shall even include the supplier who is registered solely for the purpose of deduction of tax under section 51. Sir, now what is this? So say for example, there is one supplier. He has provided some supply. He made some supply. Okay, he made some supply which is taxable under reverse charge mechanism, which means the recipient himself is required to pay the GST under reverse charge mechanism. Now, as I have told you that if the supplier is unregistered person, then the recipient will generate invoice. Recipient has to generate an self-invoicing as per 31 subsection 3 clause F. Now they are saying one more thing here. Say for example, supplier is registered person, but he was registered only for the purpose of deduction of TDS under section number 51. Supplier is a registered person, but that supplier has taken registration only for the purpose of deducting TDS under section number 51. So for the purpose of this 31 subsection 3 clause F, they have added explanation that for the purpose of self-invoicing, even this person also will be treated equivalent to unregistered person only. So if you are a person receiving services from a supplier who is registered, but that supplier has taken registration only for the purpose of deduction of TDS under section number 51, he will still be deemed as unregistered person only. And for that service also, if it is getting covered under reverse charge mechanism, you are only required to do the invoicing as per 31 subsection 3 clause F. Able to understand? So when I say supplier is unregistered, that supplier will also include the person who has taken the registration only for the purpose of deducting TDS under section number 51. In those cases also, recipient is only required to do the self-invoicing, provided if the service is getting covered under reverse charge mechanism. That is what this explanation says. For the purpose of clause F, the expression supplier who is not registered shall include the supplier who is registered solely for the purpose of deduction of TDS under section number 51. Understood? So this also comparatively we have covered it. So that's it. We are done with the amendments from time of supply chapter, and collectively we have also covered tax invoice related discussion also. In registration, we have one small amendment. Let us try to understand. To 30 subsection 2, they have added one new provision. So we all know 30 talks, subsection number 30 talks about revocation of cancellation of registration. If your registration has been cancelled within a prescribed time limit, if you make an application, the proper officer might revoke the cancellation of registration. For that, they have added one proviso which says that provided further that such revocation of cancellation conditions of registration should be subject to such restrictions as may be prescribed, which means if the proper officer is passing an order for revocation of cancellation of registration, that means he is giving back your registration. He cancelled the registration on suo motu basis, you made an application, and the proper officer is giving your registration back. At that point of time, he can keep some restrictions. If he feels like, if he wants to add some extra restrictions, he can add the restrictions. Subject to that restrictions only, he might revoke your cancellation. Like he might say, okay, we will revoke your cancellation of registration, but you should not make any interstate supply. If he feels appropriate, he can keep such restrictions. That extra provision has been added. So if the PO is satisfied, he will revoke your cancellation, but along with your revocation of cancellation, he can add extra restrictions also. He can place restrictions also that you should not do certain things after get your registration back. This provision has been added. Now, in the ITC chapter also, we have one amendment and one circular. Let us see. So we all know 17 subsection 5 talks about blocked credit. 17 subsection 5 clause I. It says that generally ITC is blocked. Earlier the provision used to say ITC is blocked in respect of any tax which you are paid in accordance with section 74, 129 and 130. So section 74 talks about fraudulent cases, 129, 130 talks about detention and confiscation. If you paid any tax because you are caught committing fraud, or your vehicle is detained, or your goods are confiscated, that's why you are paying any GST. For that, you can't claim any input tax credit. This used to be the earlier provision, but now what they have told us, ITC will be blocked for any tax paid in accordance with the provisions of section 74 in respect of any period only up to year 23-24. That means you are caught committing any fraud till financial year 23-24. If you are caught committing any fraud, that's why you have paid the GST. That GST you can't take it as input tax credit. That means if you are caught committing any fraud from financial year 24-25, that's why you have paid the GST. Still that GST also you can claim it as input tax credit. Still that GST also you can claim it as input tax credit. Able to understand, everybody? And earlier they used to say if your goods are confiscated, if your goods are detained, that's why you have paid the GST. Then also ITC will not be available, but they have removed this section 129 and 130. That means if you have paid any GST because your goods are detained or your goods are confiscated, that's why you have paid the GST. There is no restriction. You can claim the GST ITC on that. Similarly, starting from financial year 24-25, if you have paid any GST because of section number 74, that GST also you can avail it. But however, if you have paid any GST because of section 74 up to financial year 23-24, that GST they will not allow you to take it as input tax credit. But from financial year 23-24, if you are caught committing any fraud or if any proceedings has taken place, that's why you have paid the GST. That GST you can claim it as input tax credit. You pay the GST and you can claim it also. But after financial year 23-24, and going forward, if you paid any GST because of section 129, if you paid any GST because of section 130, because your goods are detained, your goods are confiscated, still you will not be blocked off any ITC. You can claim the input tax credit. Important from the examination perspective, they might draft a direct question from this. Okay, so what is the existing provision? They used to say if you have paid any GST because of section 74, 129, 130, no ITC for that. But now they have removed 129, 130. If you paid any GST because of 129, 130, still you can claim ITC of it. And restriction is there on GST paid under section 74 only up to the financial year 23-24, which means from financial year 24-25, even if you paid any GST because of section number 74, that GST also you can claim it as ITC. Okay, next. One more circular has been added. Now I will tell you the gist of what this circular is. You can easily understand later that. Okay. See, if you remember ITC chapter, when we discussed the ITC chapter, we have discussed section number 16. See, section number 16 talks about what are the conditions which are required to be fulfilled in order to claim the input tax credit. If you want to avail input tax credit, what are the conditions which you are required to fulfill? In that, one of the most important condition is you should have received that goods or services. You can claim input tax credit only when you have received the goods and services. If you have paid the amount, but if you have not yet received the goods and services, you can't avail the input tax credit till the time you have received it. Say for example, you purchased some goods. You have purchased the goods on 28th of July. But those goods are received by you on 10th of August. Those goods are received on 10th of August. Say for example, you got the invoice, you made the payment also on 28th of July, but you received the goods on 10th of August. So as per section number 16, you can claim the ITC only when you have received. For the month of July, when you are filing the return for the month of July, you can't claim the ITC because you did not receive it. Since you received it on 10th of August, since in the month of August you have received it, when you are filing the return for the month of August, then you can claim the input tax credit. So one of the essential conditions for availing the input tax credit by input tax credit is you should have received such goods or services. Only when you have received it, then only you can avail input tax credit. Now, what issue came before the government authorities is sometimes the transactions will happen on X contract basis. Sometimes the transaction X works contract. Okay. So they use one phrase in the industry. Sometimes in the industry, the transactions takes place on X works contract. Sir, what do you mean by this? Say for example, there is one manufacturer. Now this manufacturer is having one factory. You are a dealer of that manufactured goods. Now generally what will happen is there will be one kind of contract called X works contract, where what the manufacturer will say is, sir, this is my factory. Okay. So now what will happen is, whatever products you are purchasing, whatever goods you are purchasing, I will load that goods in a truck. And ownership will get transferred at the factory gate. I will load the goods into the vehicle, and at the factory gate itself, my responsibility will come to an end. That means after this factory gate, once the vehicle crosses the factory gate, if any damage happens, if any loss happens, if any calamity happens, all the responsibility will be with the dealer only. That means the manufacturer will take the responsibility for that goods only till the factory gate. The moment the goods cross the factory gate, if any loss happens, if any damage happens, if any issue happens, the manufacturer will not bear any responsibility. All the responsibility will rest with the dealer only. That means, literally speaking, ownership is getting transferred the moment the vehicle crosses the factory gate. Say for example, the vehicle is crossing the factory gate on 28th of July, but the dealer received the goods on 10th of August. Sir, when this dealer can claim the input tax credit? Now, what GST officers started doing is they have started saying that section number 16 says you can take the input tax credit only when you have actually received the goods. And this dealer is actually receiving the goods on 10th of August. So proper officers used to say the recipient will become entitled to claim the GST only on 10th of August. But this created so many troubles for this kind of dealers. They went before the government and argued that, sir, our ownership is getting transferred the moment they cross the factory gate only. The ownership is getting transferred while the goods are crossing the factory gate only. So even though we are physically receiving the goods on 10th of August, but our ownership was transferred on 28th of August. But what GST officers are saying is, when we are filing the return for the month of July, they are asking us not to claim the ITC. They are asking us to claim the GST only in the month of return when we are filing it for the month of August. Why? Because we have received the goods only in the month, we have physically received the goods only in the month of August. So proper officers are saying you can't claim the GST for the month of July. You can only claim the ITC in the month of August. But these people went to the government and complained, sir, this is creating a working capital issue on us. We are making the payment also. Since ownership is getting transferred, this fellow is asking the payment on 28th only. So we are also making the payment for this entire goods on 28th. But ownership is also getting transferred to us on 28th. But we are only receiving the goods physically on 10th of August. So even though we have made the payment, proper officers are saying in the month of July, we are no longer eligible. We are not eligible to take the input tax credit. They are asking us to claim the ITC only in the month of August. Sir, because of that, we are having working capital issue. Even we made the payment, but still we are unable to claim the input tax credit. Please do something. So the government has given clarification that, so okay, if this is the case, where the transactions are happening on X works contract, that means where the ownership is getting transferred at the factory gate of the manufacturer, let us do one thing. It will be deemed as if you have received the goods the date the vehicle crosses the factory gate. Government has given a circular and told, okay boss, dear proper officers, don't harass these dealers. Even though they have physically received the goods on 10th of August, it will be deemed as if on 28th of August only they have received the goods, and they will become eligible to take the input tax credit for the month of July only. They need not wait for the August month to file the return to claim the ITC. They can claim the ITC on 28th of July itself. They become entitled. So to sort out that working capital issues, the government has given the clarification. Able to understand? Clear and comfortable? So if we start reading that circular in a detailed manner, very important. This also I feel very important from the examination perspective. Like this, they can frame a question. Whatever example I have given you here, that is having a potential to get framed as a question altogether. Let us read it. So clarification on availability of input tax credit as per clause B of 16 subsection 2 of the CGST Act in respect of goods which have been delivered by the supplier at his place of business under X works contract. So in automobile sector, the contract between automobile dealers and original equipment manufacturers is generally on X works contract. So where this issue has come is in one of the automobile sector, this issue has come. So in the case of automobile dealers, there will be original equipment manufacturer and there will be a dealer. But that transaction happens on X works contract. And as per the terms of the contract, the property in the goods, that is ownership in the goods, vehicles generally, passes to the dealer at the factory gate of the manufacturer only, when the goods are handed to the transporter at the instance of the dealer, and the delivery on the part of the OEM is completed at the factory gate. The moment the vehicle crosses the factory gate, delivery is completed. After that, what is happening? That manufacturer is not worried. The transporter may be arranged by the OEM on behalf of the dealer, and even insurance is also arranged. It may be done on behalf of the dealer. Any claim in case of loss has to be lodged by the dealer only. Sometimes what manufacturers will do is they will only speak with the transporter. They will only arrange for the insurance facility also. But still, they will do it on behalf of the dealer. They will not do it on their own account. Like for example, as a dealer, I am requesting, sir, I wanted to buy so and so goods. You please speak to the transporter. Responsibility is mine only. Just you have a talk with the transporter. Just you book the vehicle on my behalf. So now what the manufacturer will do is, as a concern, he will talk the vehicle and he will load the goods. He will talk to the vehicle owner and he will load the goods. But ultimate responsibility. But the moment the vehicle crosses the factory gate, the responsibility will be with the dealer only. Sometimes the dealer will ask the manufacturer, sir, on my behalf, please take the insurance also. Transit insurance also you take. So manufacturer might buy the insurance policy on behalf of the dealer, but his responsibility will come to an end the moment the vehicle crosses the factory gate. If at all any loss happens, insurance claim has to be raised by dealer only. Manufacturer will not do. So even though the transport has been arranged by the manufacturer, even though insurance has been arranged by the manufacturer, still the ultimate responsibility will be with the dealer. The manufacturer's responsibility will come to an end the moment the vehicle crosses the factory gate. Next, issue. So what is the issue here is, issue which arose for consideration was whether ITC can be availed by the dealer only after the vehicles are physically received by automobile dealers at his business premises, or ITC can be availed on the date the vehicles are billed to him and handed over to the transporter by the OEM at his factory gate. In our example, will this dealer become eligible to take the ITC on 10th of August, or will he become eligible to take the ITC on 28th of July? Clarification. In such a scenario, the property in the said goods can be considered to have been passed on to the dealer by the OEM, by the manufacturer, upon handing over of the said goods to the transporter. So here, when the ownership is getting transferred, the moment they are transferred to the vehicle on 28th of July itself, the ownership is getting transferred. Thereby, the goods can be considered to have been delivered. It will be deemed to have been delivered to the registered person through the transporter by the supplier at his factory gate, and the supply of the said goods can be considered to have fructified. That means considered to have completed at the factory gate of the manufacturer only, even though the goods may be physically received by the registered person after the transit period. Even though he is physically receiving on 10th of August, it will be deemed as if the goods have been received on 28th of July only. Accordingly, it is clarified that as per section 16 subsection 2, the registered person can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate for their onward transmission. The same principle is applicable in respect of supply of other goods also, wherever the contract between the supplier and recipient is on X works contract basis. See, this circular has not been given only for automobile industry. This circular is applicable everywhere for any such goods which are getting transported as per X works contract basis. Everywhere this rule will become applicable. This is not only for automobiles. Right. The same principle is applicable in respect of supply of other goods also, wherever the contract between the supplier and recipient is an X works contract. And as per the terms of the contract, the goods are to be delivered by the supplier to the recipient or any other person on behalf of the recipient. The property in the goods is standard transfer to the recipient at the time of such handing over. Whenever the goods are handed over to the transporter, at that point of time only, the goods have been deemed to be delivered. Next. It is also mentioned that as per the provisions of the GST Act, a registered person is entitled to ITC only in respect of supply of the goods or services which is used or intended to be used in the course or furtherance of the business. See, one more essential condition. Say, for example, when the goods are transported here, so it will be deemed as if on 28th of July only you will become eligible to take the ITC. Now, say, for example, for the month of July, he filed the return and he claimed ITC. But as we all know, one of the essential condition, the ITC will be available only when the goods are used or intended to be used for the purpose of business. So for the month of July, he filed the return, claimed ITC. But later, after he has received the goods, if it was found that he's not using it for his business purposes, he's using it for some other purposes, then whatever ITC he has taken, he has to reverse it. That condition anyhow will be there. So you will claim ITC here. But later, after you have received the goods, if you are putting it to use for other purposes apart from business purposes, then you have to reverse back your ITC. So that anyhow will be there. Thus, if the goods are found to have been diverted for non-business purposes at any stage, either before physically receiving the goods at his business premises or subsequently, the registered person shall not be entitled to take ITC. That means he has to reverse it. So he can claim ITC here, but either during the transportation or after receiving it, if you are using it for any other purposes, then you have to reverse the ITC, whatever you have claimed. Sir, I have claimed the ITC here, but after claiming the ITC, during the transportation, if the goods are lost, during the transportation, if the goods are destroyed, or during the transportation, if the goods are stolen, then what will happen to my ITC? Reverse it. Why? Because as per general rule, if the goods are lost or stolen, damaged, or something has happened, even ITC also will not become available. So that's what they say here. Further, if at any time after receiving the goods, such goods are lost, stolen, destroyed, or written off, or disposed by way of gift or free samples, then the registered person will not be entitled to take ITC. He has to reverse it back. Clear? Next. Accounts and records. This is not such an important provision. As I have told, there are many sections where just they have added reference to section 74A. So even they have amended section 25 subsection 6. That means if you are not maintaining proper records for the goods and services, whatever you have received, the action can be taken against section 73 also, or action can be taken against you under section 74 also. Now, since a new section has been introduced, action can be even taken under section 74A also. As I have told, this is not important from the examination perspective, because what is section 74A, that we will discuss at the CFNL level. Okay, next. See, in the e-way bill, we have one small amendment here. So what is that is, see, if you remember guys, I have told you one thing. If you are a person and if you are making supply of notified handicraft products, if you are making interstate supply of notified handicraft products up to a turnover of the specified limit of 20 lakh rupees, you are not required to take any registration. Yes or no? So we have seen in the registration chapter, if you are a person who is making notified, who is making interstate supply of notified handicraft products or notified handmade goods, till the time you exceed the turnover of 20 lakh rupees, you are not required to undergo compulsory registration. But they have told that if you are a person who is not registered or who has been exempted from registration, and if you are making interstate movement of notified handicraft products or notified handicraft or notified handmade goods, irrespective of the consignment value, you have to compulsorily generate an e-way bill. So if you are an unregistered person, if you are not registered, but you are making movement of the goods, you are making interstate supply of notified handicraft products or notified handmade goods, even though the consignment value is less than 5,000 rupees, you are required to compulsorily generate the e-way bill. But now here you will get a doubt, sir, here the supplier is unregistered person. No, how he will generate the e-way bill? You are telling here e-way bill is mandatory. If you are a person making notified handicraft supply of the goods, Even though the consignment value is less than 50,000 rupees, if you are unregistered also, you have to generate e-way bill. But now you will get a doubt, sir, if I am an unregistered person, how can I generate the e-way bill? Or there could be other case. Say for example, you are an unregistered person, you are causing the movement of the goods. Generally, if you are not registered, or if you are causing a movement of the goods for less than 50,000, you are causing the movement of the goods for less than 50,000, not notified handicrafted products, not handmade goods, some general goods are there which are causing a movement, consignment value is less than 50,000. Generally speaking, e-way bill is not required. E-way bill is not required, but still you wanted to avoid all the troubles on way. So during the transportation, there might be some troubles happening. So that's why what you wanted to do is, even though the consignment value is less than 50,000, still you want to generate the e-way bill. But you are an unregistered person. Sir, if I'm an unregistered person, how can I generate the e-way bill? See, both the cases, you are an unregistered person making notified handicraft products, and you are required to compulsorily generate e-way bill, but you are unregistered. How you will generate e-way bill? Or it is not compulsory for you to generate e-way bill, but out of your own choice, you have opted to generate e-way bill, but you are unregistered. Sir, how can I generate e-way bill? So in both the cases, since you are unregistered, how you can generate the e-way bill is by getting an enrollment number. As I have told, we generally transporters and all will have that unique enrollment number, right? So you can also get that enrollment number, and using that enrollment number, you can generate the e-way bill. That's what they have told here. So if you see here, the following persons required to generate the e-way bill shall submit the details electronically on the common portal in the prescribed form, and upon validation, you will get one unique enrollment number. Since you are an unregistered person, but still if you want to generate e-way bill, you have to submit one form, and by submitting that form, you will get one unique enrollment number, and using that enrollment number, you can generate the e-way bill. Who can generate the e-way bill? If you are an unregistered person making interstate transport of handicrafted goods exempted from obtaining compulsory registration and is required to generate e-way bill irrespective of consignment value. But how he will generate without registration? You can generate unique enrollment number and generate the e-way bill. Similarly, if you are an unregistered person but you are opting voluntarily to generate the e-way bill, still how you can do it? You can get the unique enrollment number, and using that you can generate the e-way bill. Clear? Next. So these are the amendments, the e-way bill, small amendment. Now, payment of taxes. In the payment of taxes, you don't have anything to discuss here. Why? Because in a few sections, they have added reference to section 74A. In section 49 subsection 8, in 50 subsection 1 interest calculation, in rule 88B, in these three sections, they have added reference to section 74A. Ignore it. Why? Because as I have told, you are not required to discuss section 74A at the CA inter level, you discuss at the CA final level. You can ignore this. Similarly, in TDS and TCS also, in one section, they have amended and gave reference to section 74A. That means if you are not deducting the TDS, or TC, if you are not deducting TDS, then action can be taken against you under section 73 also, 74 also, 74A also. Irrelevant, ignore it. Then returns. In the returns, when it comes to the return for TDS, as we all know, if you are a person who is required to deduct TDS under section number 51, you are required to file one return called GSTR 7. You are required to file one return called GSTR 7. Earlier, what they used to say is, earlier they did not specifically say if in one particular month, if you did not deduct any TDS, there is no requirement of nil GSTR 7. But now they have added requirement. If you are a person liable to deduct TDS, whether you deducted it or not deducted it, compulsorily you have to generate the GSTR 7. Compulsorily you have to file the GSTR 7. That means nil GSTR 7. This concept also they have brought it. So if you see here, amended 39 subsection 3, every registered person who is required to deduct tax at source under section number 51 shall electronically furnish a return for every calendar month of the deductions made during the month in such form and manner and within such time. So you are required to file a return in such form and manner. What is that form and manner? GSTR 7. And what is the time limit within such time limit? What is the time limit? On or before the 10th day of the month succeeding the calendar month. Like for example, if you take May, for the May month, you are required to file the GSTR 7 on or before the 10th of June. So earlier they used to say the time limit also in the main section only. But now what they have done is, in the main section, they have told within such time, and the time limit they have amended they have given it in the rules. Time limit did not undergo any change. Earlier, they used to say the time limit in the main section only. But now in the main section, they have told within such time as may be prescribed, and the same time limit they have told in the rule 66.1. Nothing else. Time limit will remain the same. So for every month, you are required to file GSTR 7 on or before the 10th day of the month succeeding it. And what is the major thing here is, what is the major amendment here is, provided that the said registered person shall furnish a return for every calendar month, whether or not any deductions have been made. Earlier, this point was not there. Now they have specifically told whether you made the deduction in that month or you have not made the deduction in that month, it becomes irrelevant. Compulsorily, you have to file GSTR 7. That's it. And one more thing here, one more section, one more rule has been amended. Rule number 88D has also been amended. So earlier they used to say, if you have claimed excess ITC and all, action will be taken against you under section 73 or 74. Now they have told even action can be taken against you under section 74A also. Just reference to section 74A has been provided. Once again, not important from the examination perspective. Clear? So that's all, guys. These are all the amendments. I have intentionally included so many examples and gave it comprehensive understanding. And even I gave you the background discussion why that amendment has been given. See, the purpose of telling you all that background discussion is, if you know the background discussion, you need not put an effort to remember the provision. Automatically, the provision will get registered in your brain. That has been my teaching style always. I will tell you the background, I will tell you the logic, so that you need not put extra effort to remember it. The provision will get automatically registered here. So that's all, everyone. This is what discussion regarding amendments for CA Inter GST. Hope you guys will make complete use of it and do your best in the examination. All the best, everyone. Take care. See you.